Are you ready to make money online? Investing in Bitcoin and exploring the exciting opportunities and risks can make you money online by investing in cryptocurrency. Do you want to join us to learn about Bitcoin, the world's most popular digital currency? Join us as we explore the exciting opportunities and risks of investing in Bitcoin. Subscribe to Life Hacks now and stay tuned for insightful videos about Bitcoin and cryptocurrency investing. Don't miss out on your chance to make money online. Have you ever heard of Bitcoin? It's a digital currency created in 2009 as an alternative to traditional banking. It works on a decentralized open source network, meaning you can send and receive money without needing a third party. Bitcoin transactions are verified using blockchain technology, meaning it records every transaction in detail so anyone can view them. Bitcoin is like cash online, but it also has features that money doesn't, like immutability and incensurability. But how did Bitcoin enter the market? That's a good question. Bitcoin was created by an anonymous person or possibly group called Satoshi Nakamoto, and it was released to the public in 2009. It quickly became popular because of the secure framework which uses a technology called blockchain. This makes it almost impossible for data to be manipulated, and because of this impressive security feature, Bitcoin was accepted by investors from all over the world. This gave people more control over their money without needing third party like a bank. But what about the potential downsides of investing in Bitcoin? That's an important question, as if the industry is full of high volatility and uncertain market conditions. That means that investing in a digital currency like Bitcoin can have advantages but also disadvantages when it comes to building wealth online through cryptocurrency trading. When it comes to investing in Bitcoin, there are a few key points to consider. First, the market for this digital currency is very volatile and unpredictable, meaning the value of your investment can go up or down quickly, so it's important to keep an eye on it. Secondly, because cryptocurrency transactions aren't regulated by financial institutions like banks, investors have less protection from potential frauds than with stocks or other assets bought through traditional platforms like stock exchanges. Finally, when discussing what influences Bitcoin prices, we must look at supply and demand among traders globally, as well as news developments which can cause price volatility. For example, an announcement on a new regulation can significantly affect how much people invest, making trading more difficult but potentially rewarding depending on various factors. So while unexpected risks make investing in Bitcoin both tempting and dangerous, careful research coupled with calculated decisions play heavily in determining if success will be achieved. What strategies can be used to reduce taxable income associated with trading Bitcoin? What affects Bitcoin's price? Market sentiment and news are two important factors, but there's another one to consider: supply and demand. Just like other investments, the value of a currency depends on how much people want to buy or sell it. If more people want to buy it than sell it, prices go up as people bid higher to get access to the investment. But if people don't want to buy it, prices go down. So how can you make money with Bitcoin? Well, there's different ways to do it depending on your approach. What methods are out there for people who want to make more money than just trading Bitcoin? Apart from trading Bitcoin, there are many other ways to make money with digital currency. Cryptocurrency mining is one way to generate a passive income. Miners use specialized hardware and software to create new coins by verifying transactions on a blockchain ledger. You can also get involved in affiliate marketing, paying commission when customers sign up for services related to cryptocurrency or buy products using Bitcoin. This results in increased sales volumes for traders and entrepreneurs. In addition, investors can lend out their Bitcoins directly at interest rates ranging from 5 to 10%, or through special peer-to-peer marketplaces like Bitbond or BlockFi. This offers various ways of financial derivatives that allow people to participate more easily in the highly volatile crypto markets without taking direct ownership of it themselves. Lastly, investors may take part in humanitarian projects around the world built on decentralized protocols run a layer above the root token. This allows those involved to participate in government initiatives by donating virtual assets directly, while receiving some benefits like tax deductions or coupons in return with greater speed than ever before observed through traditional systems worldwide. Now that we've outlined some popular methods of making money with Bitcoin, what risks and safety precautions should you take into consideration when choosing any investing strategy involving cryptocurrencies? When trading Bitcoin, it's important to keep security in mind. Make sure that you do research on the platform you plan to use, and make sure they encrypt their transactions securely. Also, make sure the tokens can only be sent from authorized wallets so your funds don't get lost or stolen and an exchange gets hacked or goes down unexpectedly. Investors should also be aware of suspicious activity like pump and dump schemes, which can cause prices to drop suddenly due to people dumping heavily invested coins, leading to financial losses instead of gains. When it comes to taxes associated with cryptocurrency like Bitcoin, capital gains taxes can vary depending on the country where the trade is taking place. It's important to understand the applicable laws before making any investments, as you may be required to pay taxes depending on the jurisdiction. There are different strategies that can be used to reduce potential taxable income set aside for authorities. What strategies can be used to reduce taxable income when trading Bitcoin? When it comes to taxes in Bitcoin, different regulations may apply depending on where you live. In some countries, profits from cryptocurrency may be treated as capital gains taxes, while transactions involving goods and services may qualify for sales or value-added taxes, VAT. It's important to understand the laws related to digital currency so you can make informed decisions when filing your taxes. Also, if you're trading on a Bitcoin exchange, you should deduct any losses from your wins if you experience price volatility over a certain period of time. This helps reduce total taxable income earned through cryptocurrencies like Bitcoin by taking advantage of deductions set up by governments around the world. Finally, if you're looking for an effective investment strategy involving Bitcoin, you need to do some research and planning before entering the market. Knowing the current trends and using both fundamental and technical analysis gets you an edge without buying or selling digital assets like BTC or USD pairings online, without risking too much liquidity at once due to potential changes throughout each quarter. To wrap up, what strategies should you be considering when formulating your own tailored approach towards investing in Bitcoins? If you're looking to build an effective investment strategy for Bitcoin, it's important to understand the key aspects of trading this digital asset. Firstly, you should be aware of the volatility and keep an eye out for any news developments that could affect pricing. Secondly, depending on your approach, you can choose different methods like mining or investing in derivative-based products like peer-to-peer marketplaces such as Bitbond or BlockFi. Finally, when it comes to taxes, laws around cryptocurrencies vary from country to country, so it's important to understand the relevant legal regulations before you start trading online with virtual assets like Bitcoin, BTC, or USD. Apart from these points, you should also consider risk management strategies like security implementation via wallets, and encryption protocols between traders exchanging tokens for cash values worldwide. Fraud control is also important to protect customers against malicious activity both on decentralized networks and centralized exchanges. So what protective measures do you recommend implementing before engaging in cryptocurrency trading online? When trading Bitcoin, safety is essential. You need to make sure your transactions are secure and encrypted to protect yourself from potential fraud or other malicious activities on both decentralized and centralized networks. One way to ensure secure operations is by using only reputable wallets. Major exchanges have their own measures in place to protect user information before sending it out to the blockchain network. Encryption protocols also help lock away data, preventing unauthorized access. This applies not just when transferring funds online, but when accessing accounts through passwordless authentication methods too. It's important to do some research around digital signatures used within platforms like multi-signature address setup, where multiple private keys must be provided among verification process asking withdrawals. Options like two-factor authentication codes can be very helpful when transferring funds between parties worldwide. Investing in cybersecurity knowledge can also be beneficial for traders who want to store credentials securely on external hard drives. Lastly, make sure your security measures are compatible across various chains and will last safely forever. Bitcoin is a decentralized digital currency created in 2009, working on an open source network. It offers features like immutability and incensorability that money doesn't have, and its transactions are verified using blockchain technology. Bitcoin was created by an anonymous person or group called Satoshi Nakamoto, and it quickly became popular due to the secure framework. To make money with Bitcoin, there are different methods to consider, like cryptocurrency mining, affiliate marketing, and lending out Bitcoins at interest rates. It's also important to keep security in mind when trading Bitcoin and understand the applicable laws when it comes to taxes associated with cryptocurrencies. Finally, to build an effective investment strategy for Bitcoin, you need to understand the key aspects of trading this digital asset and using both fundamental and technical analysis when buying or selling virtual assets. Are you ready to take the next step in your financial journey? Do you want to know if an AI financial advisor is the right choice for you? Watch our next video to learn more about the advantages and disadvantages of using an AI financial advisor and how it can help you maximize your investments and build wealth online. Thank you for watching. If you enjoyed this video, make sure that you join Life Hacks by subscribing now.